Again, I can't remember for sure when I was here last. It's always kind of a continuing conversation, which is the best way to do this. So anyway, yeah, we'll start off on this. I don't think this slide has probably changed. It hasn't changed in several months for the most part. So the big picture story in some sense hasn't changed a lot. These are kind of the bottom lines. We'll go into a little more detail on some of this. Cattle inventories, I said peaking. Probably a better word is plateauing. I think they're actually not peaking in the historical sense, peaking and then implying a liquidation after that. We're kind of on a flat spot here, I think, which is something kind of new for the industry. We did get a July mid-year cattle inventory report that sort of confirmed that. I've been saying this for quite some time now, but the mid-year beef cow herd number was, I think the beef cow herd number was slightly different, but just fractionally different from last year. The overall cattle inventory was even with last year. So again, kind of showing this idea that we're reaching a peak level, but there's nothing out there right now that would suggest to me we're going to start liquidating. So, we've still got a little ways to go in terms of peaking out beef production. There's about a 2-year lag in this thing. So, slightly bigger calf crop this year. It'll work its way through the system next year. So beef production will actually peak probably going into 2021 relative to that. One of the reasons this is a plateau instead of a peak, as it has been historically, is because demand for the most part has matched the increase in production we've had over the last 5 years in this expansion. And so as long as that continues, then there's no reason really for us to liquidate. We're just kind of staying, and now obviously we've got some things to talk about here in a minute. We have some short-term bumps in the road, but in general, things have been pretty well in balance. Okay, I've had some concerns about demand weakness. It's nothing major yet. Obviously, we'll talk about the international stuff. We're not exporting as much as we have been. That's a potential problem. Domestic demand has got some signs of weakness that I'm watching, but I wouldn't say that there's any obvious trouble spots out there yet. And of course, we're still operating in a really big whirlwind of external events that have, if anything, accelerated in the last few months. We've still got a ton of trade issues out there, none of which have been resolved at this point. So we don't have the new version of NAFTA in place yet. TPP continues without us, and we're beginning to see some of those impacts. I'll come back to that when we talk about trade. We're talking about a deal with Japan. A lot of splash a week or so ago that we have an agreement in principle. I'm not sure what that means. There's no details in it, so we'll see. Okay, I'm sure it's at the minimum a step in the right direction, but it's not necessarily going to be an easy process, especially with respect to beef, and probably some other things too that I don't know as much about. China obviously is a huge issue still. The EU and Great Britain are still trying to decide how amicably or not they're going to break up. It looks like it's not going to be very amicable at this point. And I don't know that I can point to a lot of specific impacts of that, but there will be some impacts. There could be shock waves again that come back from the bigger picture that will impact us. So a lot of stuff out there. There are some more recent things that we haven't had to talk about so much. So we'll talk a little bit about the fire out in Finney County a little bit and what we see so far from that. African, and this one didn't get fixed, sorry about that. That's supposed to say ASF, not AFS. African swine fever, continues to be, has been for over a year now, a huge issue, directly affecting the swine side, but is impacting, or will continue to have some indirect impacts in all protein markets, including beef. Pretty limited direct impacts that you can identify in the U.S. at this point, but it could change a little bit. Obviously, one of the things that's changed is that we're going to talk more about crop markets. We've got more uncertainty this year about where we are with corn crop. First time in quite a long time I've actually had to talk about that a little more than in the past. There's some other things out there that you see. I'm not going to talk about these unless you want to. There's all this stuff about alternative protein, so that's an issue that's out there. I hear a lot of meetings where people are talking about this trend of crossbred dairy calves. And it really is growing fairly fast from what I can pick up. There's no real data on it, but anecdotally, it would seem that there's a lot more of that happening, and that's going to have some impacts on a little bit on the way the industry works. We don't have this clean line between beef and dairy anymore. It's a lot more of these crossbreds. Relative to the plant, we finally have, as of last Thursday, the actual slaughter data for the week after the fire. We get that actual slaughter data with a 2-week lag. So you probably heard some stuff right after the fire talking about what happened to slaughter the next week. Those were based on daily estimates. And they're relatively close on average, but they're not exact. And so here's what actually happened, given the data that we have now for the week before to the week after. You know, we talked about this plant, or you read, I know, about this plant being somewhere in the neighborhood of 5% of steer and heifer slaughter capacity. From Monday through Friday, the week after the fire, it was lower every day, and if you calculate that out, it averaged out to a 4.6% decrease in slaughter from Monday through Friday after the fire. Okay, so pretty close. It actually mirrored pretty close to what we were saying, but by Saturday, the week after the fire, so a week later, the industry put together a pretty big Saturday response, which almost offset the rest of the week. And so the net effect is, for steer and heifer slaughter, the Monday through Saturday total was only down 1,000 head. Now, you probably saw some stuff early on that said slaughter went up by 9,000 head the week after the fire. I'm not sure where that really got started. It was people being a little sloppy. For one thing, steers and heifers and cows and bulls, that total was up 9,000 head, even on the estimates, which were ultimately changed for the actuals. If you went back and actually looked at the steer and heifer part of those estimates, they were saying they were up 1,000 head. Turns out it was down 1,000 head. So most of that 9,000 head increase that you've been reading about, and it's still circulating out in some of these articles, that slaughter went up 9,000 head. 8,000 of that was cows and bulls. Had nothing to do with the fire. It was just week-to-week changes in cow and bull slaughter. So at any rate, I didn't say a whole lot for a while because I was waiting for these actual numbers. And so last Thursday was the first time we had the actuals for the week after. And then we'll go from here. And I'll be watching it this next week as well for the second week impact. The estimates for the second week after the fire would suggest that slaughter may have actually increased a little bit. But again, those are based on estimates, so we'll see what the actuals come out to be. So that's kind of where we are there. You know, and then of course we can talk about the ripple effects in various markets. The boxed beef market, I guess I have part of that, so I'm gonna, I don't know why. You can sort of see obviously kind of the initial impacts on calf markets. Started to recover a little bit, but this is very much due to the fire, so it's that relatively short run impact. It will, I think, settle out pretty quickly here on the cash side. Jerry and I were talking about the feeder futures has been very slow to recover, and I think that's a futures market problem, not a cattle market problem. I mean, I guess you can't separate the two at some point, but if there is a problem in this, I'm more concerned about it on the future side than anything. So anyway, that's kind of what's happened. That's sort of where we are. Here's the feeder cattle market. It's been kind of a strange year in some ways. Again, we had this spring peak here. We dropped off counter-seasonally through the first half of the summer, then started to pick up some of our seasonal increase. These markets normally peak in July and August before dropping off a little bit, and then again you had the short-term shock from the plant fire. Fed cattle markets, you know, have been averaging pretty close to last year's levels. Again, they did drop off. They're slowly recovering. It's been slower here. In fact, this doesn't have last week's numbers, and it looked like they actually softened back up a little bit last week. I think what they're saying for the Southern Plains was about 103 again last week. So they've taken longer to recover. Again, there's been a ton of adjustments in the industry on both the fed cattle side as well as on the meat side relative to this thing. For the most part, I'll just say this, and then we can talk about whatever you want to talk about. I would say that in general, the reaction or the impact of this plant fire is exactly what I would have predicted. And we can talk about magnitudes, but the general pattern of what has happened is exactly what I would have expected, and it's exactly the way that markets fix problems. It gets pretty dramatic sometimes. Markets don't like it when they get shocked. And so they do pretty dramatic things to get past that, and that's what we've seen so far. There's the box beef, or at least the first half of it. This doesn't show that it has already started coming back down. We did see a sharp increase in box beef. It went up it peaked out at about 11.7% up from the day of the fire, or the day before the fire, technically. Okay. But it's already started coming back down. It's currently, the overall box beef is about 7% above where it was, so it's been coming back down for the last week. Doesn't show up here, but it will as soon as we update this chart. And if you go in and look at the various meat markets, at least at the primal level, you see different patterns of impacts, which is what I would expect. Okay, that box beef market average is capturing a ton of different meat markets. And so we see different patterns. They all peaked somewhere up in that 10 to 13 or 14% range, but most of them have started coming back down, whether you're talking ribs. In fact, the middle meats have come down the most. Ribs shot up to 11% above. They're back down to where they're only 2.8% above, something like that. Loins, much the same way. The end meats have actually maintained a higher level since the thing, more so than anything else. In fact, it's not clear that the rounds have actually peaked yet. They may or may not be. The last week of data was the highest so far, so we'll see going forward whether they start to come back down. Lots of changes happen as a result of a shock like this, affecting many, many different markets on the meat side, and then on the fed cattle side, you got a lot of scrambling to figure out what you're going to do with these cattle. Nothing in the carcass weights, I guess I'm getting ahead of myself, but nothing in the carcass weights would suggest that we delayed cattle very much. I think, probably at most a day, scrambling around to get them killed somewhere else. That plant has an average capacity of around 30,000 head a week, but the data showed that we only reduced kill about 1,000 head. So there was a lot of scrambling took place to go ahead and get those cattle processed someplace. So it happened again. It got done, but it wasn't easy in some cases. I know there was a lot of scrambling and a lot of extra time and energy and cost involved in making that happen. Cull cow market, I've told you this before. I've just put this chart up and then I sort of put up my hands and I don't know what's going on with cull cows. I haven't been able to figure them out for a year. Now they're kind of going up, which is a little counter-seasonal. That red line would, I think I actually, maybe I took the charts out, but we're getting ready to see them drop off here, and of course they'll drop off to a sharp seasonal low by October. So we're sort of putting in a rally here. Some of that, but that last bit anyway, I have to use this. You remember the laser pointers don't work today, so I have to go back to the old radio antenna. That little bit may actually be related to the plant fire and related to those end meat market impacts. There was some disruption in hamburger product supplies, so that could be related to that. I wouldn't swear to it, but maybe what's going on there. Again, you see that here on the boxed cow beef market a little bit. Oh, there's my fed. Well, so there's my fed steer chart. For what that's worth, we're normally right about at the seasonal low right now anyway. We thought we had a possible seasonal low in earlier in the summer, but I wasn't convinced then that we had time to go lower. Of course, the plant fire puts an exclamation point on that in terms of it being the seasonal low going forward. There's the utility cow, so that's what they usually do. Here, this time of the year, we're dropping off pretty sharply seasonally, and they've been going up. So again, they're doing counter-seasonal things, and I try to have a story for most everything. I don't have a good story with the cows. They just pretty well got me buffaloed.
One thing interesting on the cows, Derrell, is they didn't process any cows in that plant at all. It was strictly
that was purely a yearling plant. Yeah, no cows in there at all. So, My understanding, I still don't know. I don't think they've announced definitively when they think the plant will be back up and running. Last time I knew, they were still trying to fully assess all of the implications. That's not a new plant, so you would think that there might be a temptation if you've got to go in and do a bunch of work to get it back online. You might want to upgrade a few things while you're there. I don't know if they're going to do that. I don't know how much pressure they feel to get sort of the minimum done to get back up and running. My understanding is that they are doing some processing there. I think most of that's probably grinding and some things they can do that don't involve. I think most of the fire damage was on the slaughter side, is my understanding. The box shop, which is always in the attic of these places, that's where they put together the boxes and drop them down onto the floor to stick meat in them. That's where the fire started. Welder, that's the one place in a packing plant that can really burn. It's the box shop. You've got a ton of cardboard in there. And so, but I think most of that was located over the slaughter side, is my understanding. So they're doing a little bit of processing. I did read that the other day. The other thing that I saw the other day is that they had something like 100,000 boxes of meat in cold storage, and they were able to salvage that, the vast majority of it. I'm sure they probably lost some product on the floor and so on when the fire broke out and they had to evacuate, but apparently most of their cold storage, again, was not compromised, and so they were able to salvage a bunch of meat that they could have lost in that respect. So here's the drought map. Here's Oklahoma. This is the last 14 days as of yesterday on Mesonet. Most of the state has had significant rain over that period in one or more events. So you can sort of see where that's at, except for the extreme southwest. Most everybody has participated in that, and that kind of confirms what you see here with that one drought area in the state. What I'm hearing out in the country is generally there's a lot of interest in wheat pasture. Conditions look pretty good, the moisture is pretty good, soil temperatures are certainly attractive. There's times, some years, when even in early September we still got 100+ degree soil temperatures that you can't really get wheat to germinate in. Soil temperatures have been good really since the rain started over the last couple of weeks. So what I'm hearing sort of anecdotally from some of the county folks up north and so on is as soon as it dries down enough where they can, they're going to be rolling. I think there's a lot of interest in planting wheat early for forage, and I think there'll be a lot of interest in cattle. Jerry and I were talking, and I've known this for years. If you go back and look statistically at variation in prices from week to week in Oklahoma, September has the highest standard deviation of any month of the year in Oklahoma. The seasonal pattern will tell you in general we're drifting lower. And by October we get the fall run. It almost always winds up dropping lower by October. But September's kind of no man's land when it comes to what happens to cattle markets in Oklahoma. They can go up just about as easily as they can go down. If we have a year where we get an early start on wheat forage, the demand is there, the fall run hasn't started. Most guys have got good forage conditions, so they may not be in a real big hurry to wean calves. So we have an opportunity here over the next probably 4 to 6 weeks for this thing to actually be, steady to stronger during that time period. I think at some point the fall run will catch up with us, but that might not happen until later in October this year, then maybe a little later than usual. Just a guess, but that's kind of the way it looks like right now. I had this in here. There's the soil moisture, one of the soil moisture maps, 4-inch level, so it's not deep. Some of the deep stuff is not quite this wet, but it's wet enough to plant, is my point. Okay, that leads us to corn. Big unknown. This has been the goofiest year, and if you watch any of the ag programs, every analyst in the country is still scratching their head on what's going on with the corn market. We've got USDA numbers. Nobody really believes them, and that's not really throwing rocks at them. It's just that they take a shot at it too, and nobody knows. We still don't know acreage. Normally by this time, certainly, through the summer, we know corn acreage. We're worried about yield. This year, we don't know either one. The one thing that seems pretty clear out there, and you look at this crop, or USDA's got a little bit bigger crop. I think their current estimates is like a 13.8 billion corn crop. This is about a 13.4. which is kind of what came out of the big crop tours, the Pro Farmer Tour, and so on, the private industry tours that they did last week or the week before up in the Midwest. But the one thing that comes out of all of that is that whatever potential is out there, the corn is late. In many cases, not all of it, but a significant part of it is 1 to 4 weeks late in maturity. So the biggest thing that's going to determine what happens to the corn market and corn price ultimately is frost date. If anybody could tell us when it's going to frost, you might have a better idea of what this corn market's like. Even an average frost date is going to catch some of the really late corn, but if it's early, then all of a sudden you're going to, so there is still that risk out there that the market could get shocked like that. Now I think there's a limit on how much it could go up, but we could certainly see that happen. Again, if we get into an early frost situation, but who knows? You know, this particular estimate at this point is calling for just about a $4 crop year average price, which is up 50 cents, I think, from last year. USDA has got it 360, which is about equal to last year, because they're talking about a 500 million bushels more corn than most everybody else is. So again, who knows? It's tough. I suspect that we really won't know the final number until it's all done and said, and the official number will be in January, and that'll be what it is officially. And up until then, we're going to still be speculating on it, would be my guess. So I think there's some risk in this feed market. Now, I think there's some things that temper that risk. One is that, again, we've proven in the last few years that, you know, even with the production we have today and all that, we can pull out a lot of stuff that we might not think we could. And so, you know, the corn market still has potential to produce and yield, maybe in ways that are a little harder to see with the kind of adverse conditions we've had. I have heard over the last month, anecdotally again, from multiple sources that some of the feed, you know, when corn got up to 450 briefly, some of the feedlots switched rations, and there's a bunch of feed wheat out there still. We've still got wheat left over from that big crop in 2015. There's lots of piles of wheat out there. It's not very good quality. We've been slowly sucking it off as we can blend it in, but we haven't had a really good quality crop since then, and so we're still working on some of that. Between that and sorghum, some feedlots switched rations in the summer, and certainly if corn made much of a run again, at least in the southern plains, that would probably be a limiting factor, because there's still some of that other alternative feed out there. Corn's been so cheap ever since 2015 that the wheat has never kicked into the rations, and so we're still sitting there trying to figure out what to do with it. But if it got very high, it could come in there and provide some sort of limit, again, at least regionally, but I think it would also probably play into a national limit on how high that corn market might run. I told you more than I know about the corn market. So obviously it all comes down to ending stocks. This has it carry out stocks for this crop year at 1.5 billion bushels or slightly higher. If it stays above 1.5 billion bushels, we don't have much life in the corn market. If we drop below 1.5 down towards 1, that's when the corn market starts rationing or getting worried that we're not going to have enough. And so you'll see that price start to move up through the low 4s. You get down around 1 billion bushels, then you'll get up in towards even pushing $5 corn. And of course, we saw what happened in 2012 when we had 700 million bushels or something of carry out, and we had $7, $8 corn. So the market gets very worried about rationing supplies to make sure we don't run out when that happens. I don't see us dropping anywhere near that low, but we could drop down below 1.5 billion bushels if we do have something like an early frost that really compromises corn production. Okay, feedlots. I didn't actually go back and do a sum for the whole year. We had 3 or 4 months that were above a year ago. The last 3 months have been below last year. So the net effect, and then marketings have continued pretty good most of the time. This last month in particular, we had strong marketing. So that's daily average. Okay, so they're staying above year-ago levels. And so the bottom line is we've got a cattle on feed inventory right now that's just about the same size as last year. I think actually came out at 100.2% of last year, which is a record level in the data that goes back to the mid-90s. Okay, now don't make too much of that, because the data series we're using now really started after the last big expansion we had in the cattle industry. So we don't go far enough back to sort of see it, but it is a record level for August 1. It's about the same as it was a year ago. We're still working our way through these big supplies pretty well, is my take on the whole thing. You know, we're not getting behind in any appreciable way. Slaughter is running currently 1.6% above last year. It's slowing down. I don't have the 2017 numbers in there, but we were up 5.3%, I think, for total slaughter. Last year it was half that, 2.6. This year it's not quite half, just a little more than half of that at 1.6. So again, we're approaching a peak in this beef production. And you can sort of see the breakdown there. Steer slaughter is down year over year. It was last year too. Heifers are still up. We're not retaining as many heifers. Dairy cow slaughter is actually starting to come back down. For the last 2 years, it's been higher than we really expected part of the time, but it's starting to come back down a little bit. And so on and so on. Steer to heifer slaughter ratio, I think I've showed you this before. I don't always show this chart, but you know, it's spiked up here to a really high level. So this would show you how few heifers there were relative to steers in the slaughter mix in 2015. Relative, you know, you got to go all the way back to the peak numbers, the peak expansion in the cattle industry in the mid-70s to see a ratio like that. But then it turned around and it's been working its way back down to more typical levels. So that heifer slaughter is up, what did I say it was up here? 7% year over year. But that's not an indication of liquidation. It's an indication that we're getting back to normal in terms of herd dynamics, both on the heifer side and on the cull cow side. Carcass weights, again, you can see them so far. They've been below last year almost every week of the year, following a seasonal pattern, so they are increasing seasonally here. Again, this last week of data, which corresponds with that slaughter data that I mentioned earlier. So the week after the fire, carcass weights went up 3 pounds. They've been going up 3 pounds since the low in 1st of June. So there's no blip in there that you can see yet. It still could happen in the next week or two. If there is any impact from delayed marketings of fed cattle because of the fire, it might show up. I really don't think it'll happen. I don't think we'll see enough impact for it to happen, but we might see a little bit of a blip yet for another. If it's going to happen, it'll happen in the next week or two's data, which would be 2 weeks ago and beyond. So, beef production, again, lots of numbers here. We're projecting right now up 1.2%, about half of what it was last year. Pork production is up 4.4%. Pork continues on a big juggernaut, and that's one of the potential issues out there relative to beef demand. Broiler production is up 2%, so total meat production is up 2%. These are all, I think every one of these is a record level for each of the meats in the total. Lots of pork out there. The pork industry has been counting on for 3 or 4 months now that even with the tariffs and even with the escalation in tariffs, that China was still going to buy U.S. pork eventually. They're going to buy everything they can everywhere else they can, but they're eventually going to come back, and they probably will at some point, but it's taken longer to get here. And so we are exporting more pork there than we have been, but it's been slow to really develop. One of the things that happened in China, not surprisingly, there was a lot of sort of preemptive slaughter. When African swine fever hits, the animals die. It's got a virtually 100% mortality. So when it hits, those animals die. But there was a fair amount of preemptive slaughter in areas where they were very concerned about it. So what happened was there was a short-term run-up in pork supplies in China in April, May, June, but they're about through that now. They've worked their way through that. Prices of pork in China are shooting very high. In fact, they're regulating it in some places to limit how fast it can go up, that sort of thing. So they're going to be out buying a lot of all proteins, not just pork. They're going to be using broilers and beef as well to supplement their protein supplies. But from the pork industry standpoint in the U.S., it hasn't really kicked in yet. And again, that's largely because of the bigger tariff situation and so on. This will be the last place they go to, but they'll probably get here sooner or later. Bottom line is we got lots of meat. That's one reason to keep an eye on demand. But so far, we've been very good. I think I've got, there's Choice Select Spread has done counter-seasonal things this summer. Again, sort of speaks to the dynamics going on in those markets. The retail prices, you know, on average are holding very steady. So I do have some concerns, or I have had some concerns at times, but it certainly hasn't shown up here in terms of retail beef. Or if you look at beef, the top line there, the red line is beef relative to chicken price. There's lots of beef and lots of chicken, and yet we've seen the retail beef price maintain very well compared to that. The blue line on the bottom is beef to pork. Again, there's a ton of pork out there, but by and large, the ratio of retail beef prices to pork has held pretty well in the face of lots of all kinds of meats that they can choose from. So as long as that continues, we're in pretty good shape here with the sort of topping out of beef production that we'll see over the next 15 to 18 months probably. So there's where we are. Record beef production. Cattle inventories peaking out here. Again, plateauing for the time being. Now, I call it a plateau. Okay, normally we've had peaks. Some of them are very sharp, 1 year peak and then start immediately going down. Historically, you can, you can kind of see that. Typically not quite that dramatic. But when you get to a level where you know you're close to a peak, you usually start thinking about the liquidation that's going to follow. Right now, I don't see an inevitable liquidation. Nothing has to give. So we could stay sideways on cattle numbers and overall markets for some time. Now, sooner or later, something's going to change. And we will either go up or down. But it's things that we don't see yet. I don't think we've, historically, cattle cycles have been something we've done to ourselves for the most part. We do too much and then too not enough and then too much. And we haven't done that this time. So it'll be some outside factor that gives us a new trajectory here after, who knows, 1, 2 years of stability? I don't know. We're in uncharted territory to have a plateau for one thing. And then, what's going to happen? If we solved all of our trade issues and took away some of the concerns we have for the general economy, we could actually pick up and see more expansion at some point, sort of re-engage the expansion. On the other hand, if all this stuff goes south and we have a complete falling out globally, or it turns into a recession in the U.S. economy, then we're probably going to turn around and go the other way a little bit. So it's just, we have to watch and see. It's factors that are not within the industry for the most part, and things that we just don't see at this point. Okay. This was USDA's projections for global beef production. So U.S. #1, Brazil, European Union, China is #4. Then you drop down to India, Argentina, and so on. If you look at exports, Brazil is projected to be the largest exporter this year. India #2, Australia #3. Australia has continued to struggle. They had a drought about 2 years after ours, so 2011 to 13 here was 2013 to 15 there. And then they kind of started to get past that and rebuild a little bit. Now they're back into a drought and seeing more liquidation. And so they've never really got their numbers up, and so they're still struggling really to maintain production. They're also diverting a lot more of their exports now to China, which we'll see in just a second here. In fact, that's probably the biggest thing that's changed on here. For many, many years, the U.S. was the biggest beef importer in the world. That's not true. Hasn't actually been true for a couple of years. China is the biggest one now, and actually if you add Hong Kong to it, which effectively you could, we've always had the data separate, so they're still treated separate here. If you add those two together, then by a long shot, China is the biggest beef importing country, and they really are the main driver globally now on global beef prices from that standpoint. It used to be the U.S. And so what happened here, whatever our demand was, would really determine things in Australia and the other exporting countries, and that's just not true anymore. So you're seeing some some significant changes there. Our exports have been down most of the year, flat the last couple of months. That's last year. Here's January through June of this year. We're down 3%, and it's a mixed bag. We're down most places. Japan being the biggest concern because it's our biggest market. That's probably a TPP effect that we're seeing starting to kick in now. We're down sharply to Hong Kong. That's China playing games with where stuff comes in. That's happened numerous times in the past. Canada is down. South Korea continues to be a very strong market. And if the trend were to continue yet another 2 or 3 years, South Korea could be our biggest beef export market. They're closing the gap on Japan, and it depends on what happens in Japan, obviously. If we can get an agreement in Japan and kind of pick back up with them, then they probably continue as our biggest market. But read something the other day, so here's part of the issue with Japan. We're trying to negotiate a deal to get a quota, which is the way Japanese is going to operate. They're going to have some sort of safeguard quota in a new agreement. We have one with them now, but right now we have a very disadvantageous tariff situation. We're paying a lot more tariff than everybody else because everybody else negotiated the new version of TPP. Part of that new version of TPP with all the other countries involved a bigger quota for all of them. If we try to negotiate a deal with Japan now, they're going to want a safeguard quota in place, and they're going to want it to come out of the total quota that they thought we were going to be a part of in the TPP. Australia has already told them, no, we're not doing that. We negotiated our deal. The U.S. chose ultimately to stay out of it. So Japan is probably not going to be as easy to settle. They're going to have some internal anguish over this deal. They're not going to want to up their total exposure in terms of that safeguard quota by giving us addition on top of that. The rest of TPP is not going to be happy and agree to cutting into that. So I don't know how it's going to get resolved, but those are the kinds of things that are going to have to get worked through here as you go forward to an agreement. That's just history, reminding you how our totals and market shares have changed over time to various export markets. We're looking at flat to probably a little bit lower, slightly lower beef exports this year after 2-3 years of pretty solid growth in those exports. And that's, again, part of my overall concern about beef demand on that international front. Imports, off this last month, they've been up most of the year. We're up 3.2% so far this year. We've been flat, basically, for the last 3 years. So a slight increase, not a major concern at this point. And some jockeying in those as well, some pluses and minuses in the individual countries. A lot less from New Zealand, and I honestly have to go dig this in, but I think that's probably because they're shipping a lot more of their meat to China now. I don't know that for a fact. I haven't gone, I keep not sitting still long enough to go look that up, but I think that's probably what's going on there with New Zealand, which has been our second biggest import market in the last several years. It was last year. Okay, and there's a history there. Again, kind of flat this year. Byproduct values, I just mentioned this quickly, had really been struggling. They have shown a little bit of strength more recently, just back to last year's level, so they've been very weak all year. They're still very weak by, you look at that 5-year average at the top. We're taking, what is that, $4 a hundredweight off of fed cattle prices right there with byproduct values. So hide markets have been extremely weak. And most of that is in the hides, the various offals. It depends on which ones you look at. Some of them are actually a little stronger, some of them flat to weaker, but it's mostly the hide values that are the weakest part of this. Cattle imports from Mexico are, they've been up. They were off this last month. They're going to be close to last year's levels more than likely. And Canada, they're up slightly for the year. Most of that increase, I forgot to go look at that breakdown, I think is on the fed cattle side. So it's cattle coming straight into slaughter, not so much on feeder cattle. It's always a mix of the two from Canada. So there's that big long-term picture, which doesn't tell you very much. Here's all those price estimates by quarters. So we're still looking at, calf prices, probably 6% lower year over year compared to last year. And I'm still showing slight possible increase here, Jerry, for next year, but obviously that's got a pretty big range around it. Going forward, especially, with all the uncertainty out there. Same thing here for the most part, 6 to 7% lower fed cattle prices compared to this time last year. And then fed cattle, this may get revised, although it probably will once we get another update here. This was done right after the packing plant, but probably once we have a little better sense of how long these impacts are going to last in the market, probably a good chance that third quarter price estimate will get revised a little bit. Again, I expect most of the impacts in the market will work their way out in the next 2 to 4 weeks, something like that. Fairly fast, maybe not totally, but pretty close. That's kind of what we learned from history. Some of you will remember Christmas Day 2000, a ConAgra plant right down the road from this plant burned to the ground and never reopened. And so we have that history. I pulled out an old master's thesis that was done a number of years ago that looked at plant closings and plant openings. And just kind of, if you go back and look at it, what we've seen so far is pretty consistent with what happened then in terms of the general pattern of things. And what that one showed in the case of that ConAgra plant was that most of the impacts had worked their way out of the market about 4 weeks, 3 to 5 weeks after the event. So we'll see. Hang on, I've got a bunch of stuff in here I didn't mean to have in here. That's not the one I want either. Well, shoot. Where is it? There we go. I do a lot of these, especially this time of the year, so every week. So this was last Friday's. The green line is average prices for Oklahoma. This is the 7 market average by weight. And so you can sort of see. The blue line is an estimate. If you took what feedlots are paying or what the market is for 825 pound steers, so these will be at the same price. If you look at all the lighter weights relative to that at this cost of gain, and that's a rough estimate of about where I think we are, then it would suggest that relative to this price, feedlots should be willing to pay this price for lighter weights. So you see what I'm saying? They're trading off. They're trying to figure out, do I want to buy something heavier or do I want to buy lighter weight and put those pounds on myself? That's what feedlots are doing every day of the week. And so I look at this. Over time, these two lines will line up. They always do. If you average this over a year, certainly over multiple years, this line, for whatever average cost of gain you plug in there, will lay right on top of that market line. But there are times when they diverge a lot, and that's one of the things that I look at to kind of give you an idea of what's going on in this feeder cattle market. I've done this enough now. In Oklahoma, it starts to sag. We'll start to see this thing with a kink in it, a bend and a flat spot well below this feedlot line for these 5.5 to 7 weight steers. We always get into that in Oklahoma. I didn't know it for a long time. I finally did enough of this and looked at it by time of year and so on. It's very regular. It happens almost every fall, and I think I know what's going on, just for what it's worth. A 6 weight steer in September and October in Oklahoma doesn't have a friend. Nobody wants a 6 weight steer relative to the market on either side of it. Calf market and relative to the bigger feeder cattle. And it comes down to this. In October, feedlots can buy 6 weights or they can buy 7 or 8 weight steers. If they buy 7 or 8 weight steers in October, they finish against the April board. If they buy a 6 weight steer, there's a good chance it's going to finish against the June board, which is always $8 back of the April board. So they're not really interested, and there's usually a pretty good supply of bigger feeder cattle in the fall of the year coming off of grass. So feedlots doing what feedlots do, they got a choice, they're probably gonna buy bigger cattle. Stocker guys in Oklahoma won't touch anything much over 500 pounds most of the time, certainly not over 550 pounds, so they don't want them. And you see this very, very commonly in the fall in the Southern Plains. I did a meeting up in Nebraska in the middle of the summer, talked about this idea, and they said, it's very different up here. Those 6 weights can be very much in demand. So different production systems, depends on what they're doing with those cattle and so on. But you see this in Oklahoma. This thing will get more exaggerated. I would predict over the next 3 or 4 weeks, you'll see this thing develop a bigger sag right here in the 5 to 6 weight range, and then it'll flatten out, and then it'll come back into this line over there at the heavier weights. So it's just what happens every year. I don't know what you can make of that, what use it is, but you sort of see that happen most every year in Oklahoma. What happens to that blue line if corn goes to $5? What will it do? It will flatten that line out, right? Because relative to cheaper corn and cheaper cost of gain, they're not going to be willing to pay as much for those lighter weight cattle and have to put that weight on with more expensive corn. So that's the kind of thing you watch. If we get into a corn market run and the corn price gets really high, in 2012, when we had record corn prices and where we were with cattle markets at that time, it does depend on the overall cattle market level too. We got very close to a point where that feeder cattle line actually almost inverted. It actually sloped up, almost. Got very close to it. It did it in 1996 too, if you remember back that far. We had $5 corn, which at that time was the end of the world, we thought, but turns out it wasn't. So that's another reason why I watch these lines, because if corn goes up, that's going to push down on this, and it's going to make that feeder line stay flatter. Now that's actually a good thing for stocker guys in general. Obviously it depends on the overall price level and the time between when you buy and sell, but when that line gets flatter, it preserves your value of gain better. Right? So right now, this is current market, so this is last Friday's market, assuming you bought and sold in the same day, which you can't do obviously, not at different weights. If you look at a 500-pound calf and you start putting weight on them, there's what 250 pounds of gain in the current market is worth. It's pretty consistent across here. Sometimes it's not at all consistent. It can be really weak on the lightweight side, it can be really weak on the heavyweight side. Right now it's pretty consistent across there, but we'll start to see that change here over the next month in those middle weights. A little bit. But there's your overall number. And I didn't look this last week. It's been probably 10 days or so when I did play with some budgets. At that time, the March feeder futures penciled out with normal basis just about where the current market was. So the overall picture in terms of this gross margin for looking ahead to the actual buy-sell margin was not vastly different from this. When you plug in everything else in the budget, it came out to be more or less a wash in terms of you got paid for your wheat pasture, you got paid to take care of the cattle, you probably didn't pocket a whole lot beyond that. Which is, at the end of the day, is the way most markets work. You get paid for all your resources. Every once in a while, the market gets out of whack enough that you get a little gravy on top of that. But it doesn't happen regularly, so you know, it looks to me like there's kind of an average year. Depends in part on whether it's your wheat or you got to go pay for it. What's wheat pasture going to rent for? If you got to rent the wheat pasture, then it's a cash out of pocket expense, and it makes that budget a little harder to show returns. It's going to return to the guy that owns the wheat, may or may not return to the guy that owns the cattle in that case. I don't know what it's going to cost to put in wheat. I haven't really calculated that yet, but what's fertilizer this year compared to last year?
Just dropped a little bit last week for some reason.
Is that right?
400,
I don't know where it's at. I may not be able to think. I think I have last year's. I do a bunch of these things, you can see. There we go. So I usually do something like this in the fall of the year. Put in, it's a partial budget, so this is the cost of producing wheat. I don't always show you guys this because this is dual purpose, and a lot of you guys are just grazing it out anyway. But this assumes that a wheat guy still wants to pull off and harvest the wheat. What do you do different to add forage on top of that? Well, you would expect that you're probably going to see some yield loss. The research shows that over the years. So an average of 6 bushel yield decrease for winter grazing, for dual purpose grazing. Put in some top dress, additional nitrogen if you're going to graze it all winter. Little extra seed. The recommendations are to increase seeding rate slightly if you're going to do that. And here's what, and again, these were last year's numbers. I have not changed these for this year. I did ask Anderson the other day. He told me to use $5 for wheat. You scowled.
Maybe.
The caveat to that was it had to be good protein wheat. There's two wheat markets out, and I'm going to tell you way more than I know about crops here in just a second, but there's two very distinct wheat markets out there right now. What did he tell me? The protein premium is 60 cents? 40 to 60 cents? So if sort of ordinary wheat or a little bit less, then that's probably $1 too high on the wheat price. If it's high protein, so that's what he was suggesting. If you had good protein wheat, he said use $5. So I've got that part. I hadn't talked to anybody else about the fertilizer, that's why I was asking you guys. I don't know if it's much different from last year, and so on. So depending on the assumptions then you make about cattle and stocking rates and rate of gain, that's got 2 pounds a day, and I've got another one somewhere. That's probably too low. It needs to be more like 2.5 probably. So that wheat cost is going to be somewhere in the 35 to 40 cents on a pound of gain basis probably. But I haven't redone all the numbers.
I think your cost of gain is going to be quite a bit higher than that if you go out and rent it.
Oh yeah. Yeah, so this is what it costs to do it. So if you're the guy that owns the wheat, you're not going to do that for nothing. So how much are you going to mark it up above that? I mean, you're probably going to add at least a dime just to be willing to fool with it. So this would be kind of a break even. If it's your wheat, this is probably what it's costing you to do that, and you can think of the rest of that as part of your profits. If you're doing it and letting somebody else rent the wheat, yeah, you're going to want more than that. You're going to want more than just cover costs. I'm not going to speculate on you. I've told you before, this time of the year, I am not going to speculate on what the wheat pasture market is going to be because I wait till I hear numbers. I don't want to be the one spreading rumors and setting the market inadvertently. That's not my job. It wouldn't be a service to anybody if I did that. I can show you this in terms of what it costs to maybe grow the wheat forage, but I'm not going to say where we're going to land in terms of the rental market. Depends. Okay, any other questions? Comments? It's 8 o'clock, so I guess I've used up my nickel here.
Best guess on the trade markets?
On the trade? Which ones?
Well, and in Mexico and Canada, are they gonna get that solved fairly quickly?
Mexico and Canada, we're waiting on ratification, mostly here, frankly. If we were ready to ratify it, then it would happen. Impacts on the market, if we do that, really are not very big. The risk in that thing is that we don't ratify the new agreement and we kill the old one. The two are not very different. So if we keep under the old one, that's fine, especially from a beef market standpoint. The dairy people would disagree with that slightly, but even that's not a real big impact. But if we keep the old one, we're okay. If we get the new one, we get the old one back with respect to beef, which is all we asked for in the first place. The risk in there is that we do something rash, like kill the old one to try to force something to happen on the new one, and then it doesn't happen. I already mentioned some of the challenges with Japan. I mean, I think we'll get an agreement eventually, but I don't think it's necessarily going to be a fast process. It's going to take some time to work through all that. I have no idea what's gonna happen with China. Who knows?
Chinese economy hurting with the tariffs and all.
Oh, yeah, oh, yeah. Yeah, it's hurting. It's hurting everybody. And so, I don't know. Don't know what to say. You guys are awfully quiet. No, that makes me nervous. You guys are usually.
We thought maybe you were gonna say something profound.
Yeah, well,
We were just waiting for you to
I
drop
made
a
you get up
hammer.
early and all that for nothing. I don't have anything new to tell you very much, I don't think. It really hadn't, in some sense, hadn't changed a lot. We've just got more bumps in the road now with the plant fire, obviously, but the feed markets has thrown a new wrinkle in it this summer that we didn't have before. And I'm not sure it's a real big wrinkle. It's another source of uncertainty. That's what's bad about all these things. Trade uncertainty, the U.S. economy uncertainty, the feed market uncertainty. Markets start building risk premiums into everything when there's that much uncertainty, and that takes away value from everybody, basically, at the end of the day. Everybody starts hedging a little bit, not hedging with futures, just hedging their decisions and their actions. And it has impacts that you cannot measure, we'll never know, but they do take a toll. And so that has been and continues to be probably my biggest concern, and it's probably worse now than it has been with the way some of these things have accelerated. I forgot to do it when I started. Most of you met Jessica. I meant to do it. Jessica Richard is a graduate student, PhD student in our department, and she's thinking that she may want to work in extension someday. And I said, well, sometimes it involves getting up real early in the morning. So I picked her up at her
My
place.
first question this morning was, Dr. Peel, you get up early this morning, every morning? I said, no, this is quite unusual. Actually. I was like, okay.
I don't leave for meetings this early, but I got her at 4:30 this morning. So we started pretty early. But anyway, yeah, I'm always happy to bring out our grad students when they have an interest and want to come along. So you
So
guys are kind of unique. I don't do this early morning thing that much. I love doing it. Don't get me wrong. I'm not complaining at all. I really enjoy it. But it would be a challenge if all 77 counties wanted to do this. That might get to be a bit much.
We're special.
You are special. You've been special to me for a long, long time. I've probably done more meetings in this county than I have anywhere in the state over the last 30 years. By the way, I just passed 30 years at OSU. So it's starting to seem like I've been around a while. I don't know. Every time we hire new faculty, I tell them to watch out for the old farts, and then I realize I am one of the old farts, so I tell them to watch out for me. All right, guys, thanks.